Inflation is coming down. Probably it takes longer, but it was very high. So it was probably unexpected for inflation to come down too quickly. And monetary policy has to do its job. I think and it's probably an illusion to think that it will not have an impact on the real economy. We haven't seen that in the past. I mean, when inflation comes down, it has to some extent, slow down the economy. And this is required, otherwise inflationary expectations and inflation behavior gets entrenched into wage and companies' behavior. So we have to break this as quickly as possible. And it will take some time, but I think that the ECB is determined and other central banks are also determined to achieve that.
It seems that so far, at least, participants here on the ground do think it has no impact on the financial industry as such, but you are now a chairman of a big European bank, so what is your assessment?
I think what we have seen over the last 12 months is the fastest increase in interest rates since probably 50 years, and the European financial industry has held pretty well. So I think the resilience of the system is proven. Now, there are other factors that we have to look at. First is if the economy slows down, we have high interest rates and the economy slowing down, so that's the combination of this may be concerning. And the other is that together with higher interest rates, we have prudential and regulatory policies which are also quite restrictive. So the impact on the real economy may be stronger than we expect. So we have to look at this. I hope the central bank is looking at this very carefully, because there is a risk of overdoing it to some extent if you combine high interest rates and very tight financial conditions.
Yeah, we've already seen that in recent bank lending surveys conducted by the ECB, that demand for loans but also supply of loans is like falling down. Yes. Is that also what you're witnessing?
Well, it's a normal reaction by the financial industry. We have seen what happened in the US, so we want to protect ourselves. We have the regulator which is saying don't lend too much. So the banking industry is simply reacting and protecting the capital of its shareholders. The point is, what does it do to the real economy? What is the impact of both the higher interest rates and these policies going to do on the companies? And that's the only thing I'm asking the European Central Bank to be very careful and not to ignore the second instrument of its policy that is working actually, and we are seeing that it's producing reactions by the banking industry.